In this session we going to learn about income under the head of salaries. Section 15 to Section 17. Before that, if you're watching my video without subscribing to my channel, do subscribe and like the video. It motivates us to upload more. This channel runs on without monetization. We don't earn any income. My only purpose, I opened this channel to share knowledge among students to score good marks. All I need is your support, so subscribe and like my video. Approved superannuation fund. 1. It means a superannuation fund which has been and continues to be approved by the Commissioner in accordance with the rules framed in this regard. 2. The tax treatment of contribution and exemption of payment from tax are as follows. Employer's contribution, refer Section 17 subsection 2, Clause 7. Employee's contribution qualifies for deduction under Section 80C. Interest on accumulated balance, refer Section 17 subsection 2, Clause 7A. 3. Exemption in respect of payment from superannuation funds, Section 10, 13. Any payment received by any employee from an approved superannuation fund shall be entirely excluded from his total income if the payment is made on the death of a beneficiary to an employee in lieu or in commutation of an annuity on his retirement at or after a specified age, or on his becoming incapacitated prior to such retirement, or by way of refund of contribution on the death of a beneficiary, or by way of contribution to an employee on his leaving the service in connection with which the fund is established otherwise than by retirement at or after a specified age, or his becoming incapacitated prior to such retirement, to the extent the payment made does not exceed the contribution made prior to April 1, 1962 and the interest thereon, by way of transfer to the account of the employee under a pension scheme referred to in Section 80 CCD, which is notified by the central government. National Pension Scheme (NPS) as referred in Section 80 CCD. The contribution made by the central government or any other employer in the previous year to the account of an employee under a pension scheme referred to in Section 80 CCD. National Pension Scheme is a scheme approved by the government for Indian citizen aged between 18 to 70 years. Subscriber of the NPS account contributes some amount in their account. In case of any employee being a subscriber of the NPS account, employer may also contribute into the employee's account. Employer's contribution to NPS account would form part of salary of employees under Section 17, 1. However, while computing total income of the employee assessee, a deduction under Section 80 CCD is allowed to the assessee in respect of the employer's as well as employee's contribution under a pension scheme referred therein. Deduction under Section 80 CCD, 2, in respect of employer's contribution would be available to an assessee irrespective of the regime under which he pays tax. However, deduction under Section 80 CCD, 1, and 80 CCD, 1b, in respect of employee's contribution would be available to an assessee only if he exercises the option of shifting out of the default tax regime provided under Section 115 BAC, 1a. The contribution made by the central government in the previous year, to the Agniveer Corpus Fund account of an individual enrolled in the Agnipath scheme referred to in Section 80 CCH. Agnipath scheme is a central government scheme launched in 2022 for enrollment of Indian youth in the Indian Armed Forces as Agniveers for 4 years to serve the country. In pursuance of the government's decision to implement the Agnipath scheme, 2022, the competent authority has decided to create a non-lapsable dedicated Agniveer Corpus Fund in the interest-bearing section of the public account head. In this account, fixed percentage of monthly emoluments would be contributed by the Agniveer, and matching amount would be contributed by the central government. The Agniveer Corpus Fund is defined as a fund in which consolidated contributions of all the Agniveers and matching contributions of the government along with interest on these contributions would be held in their respective accounts. Central government's contribution to Agniveer Corpus Fund account would form part of salary of employees under Section 17(1). However, while computing total income of an individual enrolled in the Agnipath scheme, being the assessee, a deduction under Section 80 CCH is allowed to the assessee in respect of his contribution as well as central government's contribution under Agniveer Corpus Fund referred therein. Deduction under Section 80 CCH will be discussed in detail and we will discuss later in the video chapter deductions from gross total income. Deduction under Section 80 CCH, 2, in respect of central government's contribution would be available to an assessee irrespective of the regime under which he pays tax. However, deduction under Section 80 CCH, 1, in respect of employee's contribution would be available to an assessee only if he exercises the option of shifting out of the default tax regime provided under Section 115 BAC, 1A.
Salary from United Nations Organization. Section 2 of the United Nations, Privileges and Immunities, Act grants exemption from income tax to salaries and emoluments paid by the United Nations to its officials. Besides salary, any pension covered under the United Nations, Privileges and Immunities, Act and received from UNO is also exempt from tax. Only if the employee has shifted out from Section 115 BAC. Remuneration received by individuals, who are not citizens of India. Section 10 subsection 6. Individual assessees who are not citizens of India are entitled to certain exemptions. Remuneration received by officials of embassies etc. of foreign states. The remuneration received by a person for services as an official of an embassy, high commission, legation, commission, consulate, or the trade representation of a foreign state or as a member of the staff of any of these officials is exempt. Conditions. The remuneration received by our corresponding government officials or members of the staff resident in such foreign countries should be exempt. The above-mentioned members of the staff should be the subjects of the respective countries represented and should not be engaged in any other business or profession or employment in India. Remuneration received for services rendered in India as an employee of foreign enterprise. Remuneration received by a foreign national as an employee of a foreign enterprise for service rendered by him during his stay in India is also exempt from tax. Conditions. The foreign enterprise is not engaged in any business or trade. The employee's stay in India does not exceed 90 days during the previous year. The remuneration is not liable to be deducted from the employer's income chargeable to tax. Under the Act. Salary received by a non-citizen non-resident for services rendered in connection with employment on foreign ship. Salary income received by or due to a non-citizen of India who is also non-resident for services rendered in connection with his employment on a foreign ship is exempt where his total stay in India does not exceed 90 days during the previous year. Remuneration received by foreign government employees during their stay in India for specified training. Any remuneration received by employees of foreign government from their respective government during their stay in India is exempt from tax, if such remuneration is received in connection with their training in any establishment or office of or in any undertaking owned by 1. the government, or 2. any company wholly owned by the central or any state government, or jointly by the central and one or more state governments, or 3. any company which is subsidiary of a company referred to in point 1, above, or 4. any statutory corporation, or 5. any society registered under the Societies Registration Act, or any other similar law, which is wholly financed by the central government or any state governments or jointly by the central and one or more state governments. Exemption under Section 10 subsection 6 would be available to an assessee irrespective of the regime under which he pays tax. Relief under Section 89, where by reason of any portion of an assessee's salary being paid in arrears or in advance or by reason of his having received in any one financial year, salary for more than 12 months or a payment of profit in lieu of salary under Section 17(3), his income is assessed at a rate higher than that at which it would otherwise have been assessed, the AO shall, on an application made to him in this behalf, grant such relief as prescribed. Similar tax relief is extended to assessees who receive arrears of family pension as defined in the explanation to Clause III of Section 57. No relief shall be granted in respect of any amount received or receivable by an assessee on his voluntary retirement or termination of his service, in accordance with any scheme or schemes of voluntary retirement or a scheme of voluntary separation, in the case of a public sector company, if exemption under Section 10(10)(c), in respect of such compensation received on voluntary retirement or termination of his service or voluntary separation has been claimed by the assessee in respect of the same assessment year or any other assessment year. Computation of relief if salary received in arrears or in advance. Step 1. Compute the tax payable, after HEC, on the total income, including the additional salary of the relevant previous year in which the same is received. Step 2. Compute the tax payable, after HEC, on the total income, excluding the additional salary of the relevant previous year in which the same is received. Step 3. Find out the difference between the tax at 1 and 2. Step 4. Compute the tax, after HEC, on the total income after including the additional salary in the previous year to which such salary relates. Step 5. Compute the tax, after HEC, on the total income after excluding the additional salary in the previous year to which such salary relates. Step 6. Find out the difference between tax at 4 and 5. Step 7. If tax computed in Step 3, greater than tax computed in Step 6, then the excess amount is admissible as relief under Section 89. Step 8. If tax computed in Step 3, less than tax computed in Step 6, then no relief is admissible under Section 89. In such a case, the assessee employee need not apply for relief.
Deductions from salary. The income chargeable under the head salaries is computed after making the following deductions. Standard deduction. A standard deduction of 50,000 or the amount of salary, whichever is lower, is to be provided to the employees. Standard deduction of up to 50,000 Indian rupees is available to an assessee irrespective of the regime under which he pays tax. Entertainment allowance. Entertainment allowance received is fully taxable and is first to be included in the salary and thereafter. The following deduction is to be made from gross salary. However, deduction in respect of entertainment allowance is available in case of government employees only. The amount of deduction will be lower of 1/5 of his basic salary or Rs. 5,000 or entertainment allowance received. Amount actually spent by the employee towards entertainment out of the entertainment allowance received by him is not a relevant consideration at all. Deduction in respect of entertainment allowance would be available to an assessee only if he exercises the option of shifting out of the default tax regime provided under Section 115 BAC, 1A. The deduction would not be available under the default tax regime that is under Section 115 BAC. Professional tax. Professional tax or taxes on employment levied by a state is allowed as deduction only when it is actually paid by the employee during the previous year, deduction on paid basis. The total amount by way of professional tax payable in respect of any one person shall not exceed Rs. 2,500 per annum. However, the amount paid during the previous year can be more than Rs. 2,500 as the employee may have paid the professional tax of an earlier year during the previous year. If professional tax is reimbursed or directly paid by the employer on behalf of the employee, the amount so paid is first included as salary income and then allowed as a deduction under Section 16. Important. Deduction in respect of professional tax would be available to an assessee only if he exercises the option of shifting out of the default tax regime provided under Section 115 BAC-1A. The deduction would not be available under the default tax regime that is under Section 115 BAC.